Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this podcast is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is Always Free, and I'm your host, Jason Graystone.
Welcome to the leading podcast for financial empowerment and wealth creation. Subscribe to this podcast so you don't miss an episode. You can connect with Jason on social media and subscribe to the Jason Graystone YouTube channel for weekly videos. Don't forget to also subscribe to the weekly newsletter to receive frequent educational content and action steps to help you design your life so you can be who you want to be. For news on all future events and updates, go to jasongraystone.com.
Alright guys, welcome back. Welcome to the Always Free podcast. If this is the first time you're listening, this is the number one podcast for financial empowerment and inspired wealth creation. And last week we had Daniel Priestley on the show as kind of a special guest. If you haven't caught that episode, I highly recommend you go and listen to that. Dan's a good friend of mine and a mentor, and he gave some insane, valuable insights into his experience with working with literally thousands and thousands of entrepreneurs, and crammed into that 35 to 38 minute episode, you're going to get so much value, so much insight, so much information, and so many tips and tricks. So really great listen. I highly recommend you go and listen to that if you haven't already. If it's the first time you're listening, just give this a little rating, give it a little thumbs up or a like or a 5-star, and leave a little review for us so we can keep this thing at the top of the charts for as long as possible, because obviously the longer we're up there, we was at number one, we're kind of in the top charts, but as long as we're up in the top and we're that new and noteworthy, we can keep pushing these messages out to people and changing lives. So really appreciate your help with helping us stick at that top spot. So this week, I was going to kind of go a bit more onto the business side, and I'll tell you why, because as you all know, the wealth creation strategy really starts with managing your personal income, doing something you actually like and managing the income from that. We've been through a lot of, saving strategies, optimizing your expenses, setting up 3 accounts, automating your bank, building a kind of cash buffer of three months living expenses and all that kind of stuff. I'm going to talk a little bit about business in this episode. But I'm going to kind of dispel some myths as well and some traps that you might fall into, because business is a big part of wealth creation. If you want to grow the income, which I'm going to be talking about in this episode, and by growing your income, what you're doing is you're really allowing the top to spill in, or the funnel to grow by the income to come in the top and really start cooking on gas with this whole wealth creation strategy. The more that comes in the top, the more income that comes in the top, or the more that then can be dispersed into your self-development, the more you can be dispersed into your savings and investments. The buffer can grow. You can maybe control your living expenses and increase those very, very slightly. Remember, the goal is financial independence. So we want to have a way of managing the growth of your living expenses. And while I'm on that, actually, one of my tips is if you're going to increase your living expenses, don't increase your living expenses unless you can increase your savings allocation by the same amount. So let's just say, for instance, you're going to go and buy a new car, and the car monthly payment goes from $200, which you're paying at the moment, to $400. Only go and make that extra £200 investment each month if you can put 200 extra into your savings, if that makes sense. Because that way you're not jeopardizing your savings. You're not increasing your expenses without increasing your savings account. So little tip there. If you are going to increase your lifestyle and you are going to increase your living expenses, make sure you only do it when you can increase your savings account by the same amount, and that way you'll keep that balance. And obviously, if you do that, it does give you a little push to earn a bit more money. You try and go out and earn a little bit more money. And of course, we're not talking about time for money, as we've been over before. We're talking about leveraged income, creating a product, a service, creating a job, doing a job once, then teaching others to do it, or leveraging the income using software, tools, systems, staff, technology, machinery, and all that kind of stuff. And that's the game. That's the game, because I hear so many people come up to me, and I know a lot of successful people. I know a lot of top entrepreneurs, bright minds, far brighter than mine, far more intelligent than me. They're running very, very successful businesses, from kind of really successful multiple dental practices right through to kind of investment companies. And these people are bright people. And they come to me and they're kind of attracted by the whole I don't have to work type thing. So they come to me and they're like, yeah, you're doing really well. I'm really interested in what you're doing. I want to learn more about what you're doing. I want to learn to trade. And when you talk to these people, they're in the goal for them is financial independence. And whether it's trading, or they want to do trading, or they want to do investments, or whatever they're doing in their business, they will say things like, oh yeah, I do like what I do. I really like the business and I do love the industry, but I want to get my business to a place where it doesn't need me. I want to get my business to a place where it will run without me. And that's what you hear them say, right? Because at first they start the job, they're enthusiastic, they create the business, and then it tires them down a little bit and they want a bit more freedom. And the reason they get into that kind of situation is because, as I've explained before, they're not necessarily focused on buying time. It takes a lot of courage to just go after buying time from day one. It's more about, where's the money going to come in from? I need money now. I can't. And that comes from uncontrollable living expenses. If you control your living expenses, you've got the cash buffer and you're saving, you put a bit away each month, and you've got an account that's constantly growing, and you've got a cash buffer. You don't make decisions like that. You don't need the money now. It's kind of, let's play the long game a little bit. Let's benefit from that exponential growth. Let's kind of build some systems, put some money in the first instance, really build a solid culture and grow that way. And then I know in 5 years, I won't be needed in this business. And not many people go down that route. But no matter who you talk to, you kind of get that view. They either want to know what I do, they want to know how to trade, they want to do some trading to bring them more freedom, right, or some more income on the side, or they kind of want to get out of their business, but it's not like the end game. Anyone who wants to learn to trade, I always say to them, listen, if you think you're just going to trade and that's it, you're delusional. Because as you become more and more free and you're kind of just not reliant upon a boss or a partner or a geographical location, and you're able to trade the financial markets, there's still something missing. And what happened with me is, as I become more and more free and I wasn't reliant upon another income and I could trade full time, there's something creeping up on you in the background to provide value, to provide service. And if you think that you're just going to get out of a business, or you're going to trade and that's it, and then that's going to be your life and you're going to sip cocktails on a beach forever, you're delusional. And I know many people who have exited businesses. I know people who have sold businesses. You're talking about entrepreneurial minds. You're talking about great minds that have got value to give and problems to solve. And yeah, they can have a little bit of a break. They might exit for $1 million, a couple of million, 10, 20, 30 million. They bank the money. They have a little bit of a rest, but there's only so much time. Straight away, they're putting the money into businesses again. They want to start something, create something. And each time they want to do it a little bit better and better. So I went off on a bit of a tangent there, but I guess the point was, if you think that freedom is the end game. It's not. You're always going to be creating, and whilst you're young, why not? You want to create multiple income streams. You want income. You want income to be coming in while you're fit and healthy enough to provide value and produce services and products. So just wanted to kind of touch on that, because there's people who have got this warped perception that if I just trade, that'll be it. I'll just sit on a beach, that'll be my game over. Or if I could just get out of my business or have not be needed in my business, then I could have cocktails on the beach. And that's not the way that an entrepreneurial mind works, or a business owner's mind works. They want to create something. Now, the people that go wrong are the people that kind of think, well, I'm actually good at this, so I'm going to start a business on my own. They've got a job. They might be, like me, I was an electrical engineer, okay, but there was a lot of electricians, a lot of trades, sparkies and plumbers and all that kind of stuff. And very, very common, they would say, I'm going to start my own business. I'm going to start up on my own. When really, what they don't realise is they'd be better staying in the job and then building a little side hustle in something that really, really inspires them, rather than taking the leap, starting a business, being a sparky or a plumber, because you're no longer the sparky or the plumber. You need a business is a very, very complex machine. It's a machine, and it's about tweaking all the little parts to get it running perfectly, right? To get it running right. And when you go to start a business and you've got a job and you think, I can do this, you start the business, but all of a sudden you've started a job. You've created a job, and you've got a job now where you've got to do the bookkeeping and the quotes and the deliveries and the project management and the technical skills, and then you've got to be the the person that does the aftercare, and then you've got to do the taxes and the inland revenue and all the kind of legal stuff, and then you've got to do HR, and you've got to employ staff, and all that stuff is just something that you are not trained in. You think that you was going to do something that you love, or that you was good at, I should say, and you think starting a business is the best way forward, when you really haven't thought about building a machine. And that's when you start playing the long game. You want to start building assets, building leveraged income types in that business, or building leveraged products, so that you can then immediately start to see the benefits of this down in 4 or 5 years' time, where it removes you from the business. So it's no different from kind of what I do as a trader, an investor, or if you're in a business. It's still freedom, but it's kind of, people don't go about it the right way. So I put out a little post on property on my Instagram this week, and everyone kind of thinks I'm against property. I'm not against property. I know people that have done very, very, very well with property, okay? But as you've heard me talk over this podcast, over the last 10 issues of this podcast, last 10 episodes, you've heard me talk about kind of controlling your cash, having a cash buffer, having some liquidity, right? Having that liquidity in your bank. You've heard me talk about your living expenses and controlling those and optimizing them and transferring them over to self-development and things like that. You've also heard me talk about your income streams, leveraged income streams. And really that's all it's about. That's all it's about. So people go wrong because they think that it's to do with net worth or being a millionaire or something like that. And I've spoke about this before. And it's a very, very common trap. So when people think about financial freedom, they think they've got to be worth a lot of money. The first thing they think is, I've got to earn lots and lots of money, or be worth lots and lots of money to have freedom. Now, I've gone over this before. I've spoke about the paper boy and the millionaire, all that kind of thing. I know plenty of millionaires that are stressed as hell, and they're the ones coming to me asking, I'd like to learn more about trading. Right, so what they do is, let's just say, for instance, they get a property. They'll get a property, and let's just say, for instance, they buy the property at 500 grand, and they 500 grand loan they use to get the property. Okay, let's just use this as an example. After a year, the property goes up to, let's just say, after 10 years, 15 years, the property's gone up to 1.5 million. Okay, so at that point, you've got $1 million of equity, and on paper, you're a millionaire, right? So on paper, you're a millionaire, but your life hasn't changed. You're still going to work every single day. Now, it might not be a property, it might be a business. Your business might be worth $1 million. So on paper, you're a millionaire, but you're still going into the business every day, doing the day-to-day tasks, and you're not free of your time. So people fall into the trap and they think, yeah, but I've got all that capital gain, I've got all that million, I've got that million in their property. And that's where they're mistaken, because my argument isn't against property being a bad thing for growing capital. My argument is you don't need a lot of capital to be financially free and financially independent. Being financially independent is about how much cash you've got to cover your living expenses, and then how many leveraged income streams that you could develop doing something that you actually enjoy as well, that will pay you for as little of your time as possible because you've used leveraged income. So that is what frees you up. So with trading, for instance, trading is not leveraged income and it's not passive income, but it takes very little time to earn very good returns. So I spend little time. I guess you could call it semi-passive. It's very semi-passive because it doesn't take a lot of my time. I can create a lot of income from it and cover my living expenses for very little time. And that gives me the freedom. But what people don't get is when I talk about property like that, they will say to me something like, yeah, but how can property be a bad move for financial independence? What about the capital gains? And they're missing the point. You can't pay for your lifestyle with your house. So what they do is they buy a house, it goes up, they draw down some equity from the house, and then they'll put more money from the equity into another house maybe, or they'll spend it, which is worse. Or they'll put it in another house and have another house, and they'll try and rent these houses out, right? And then what happens is they do it again and again and again, and it's kind of this domino investing strategy. And by the way, the only people that kind of recommend or promote domino strategies are either property developers or people selling property strategies. Okay, there comes a point where you've got so much money tied up in property that if there is a correction or there's some kind of down move in the market, and it crashes, you are going to be stressed out because people might not afford to pay you. They'll move out. You've got upkeep of the house to keep up. You've got to pay all those mortgages, and you will be in a stressful situation. But you'll be a millionaire. Right? You'll have a net worth of $1 million, $1 million plus. So that's where the confusion is, because they're thinking that you've got to be worth a lot of money to have financial freedom, and they go and make decisions that are the complete opposite to what they want to do. And I've said before, buying a house to live in, the kind of picket fence type, perfect home, dream home kind of thing. Buying a house to live in with the goal of financial freedom is like learning to create a nuclear warhead with the goal of world peace. It is completely conflicting. And that is where it kind of opens people's eyes when I express these views, and they're like, wow. And that's it. Like, they ask for my advice. I tell them and they don't like it. They don't like it because they've been told that property's good and all the rest of it, but they don't go about it the right way. So, and it's the same in business. So I'm much more about liquidity. I like cash, because you pay for lifestyle with cash. You don't pay for lifestyle with a house. You pay for lifestyle with cash. Liquidity in itself, it's called liquid. If you think of it like water, right? Currency, it's a current, it's like a river, flows around the banks. You kind of, when companies float on the stock market, they float on the water, right? Or when people say, your money's just in a savings account paying little interest, it's stagnating like a stagnant pond. And when you put your liquidity into a house, people say, yes, it grows. If you imagine freezing water, Well, when you freeze water, it kind of expands into an ice cube. If you've opened the freezer before, you see all this, like, sometimes you have to defrost your freezer because the ice is like, won't even let you shut the door if you've left it too long. That's because it's expanding, but it's slowly, but it's frozen. You can't drink it. You can't drink the ice because it's frozen. So how do you survive? You can't just draw from it. You can't survive from it. It's frozen. It's growing slowly, and you can't access it. You can't do anything with it. So the next thing that people, kind of that throws people off is, I'll give you an example. If you have 500,000 in a house, right? Let's just say you've got 500 grand equity in a house. If you was just to go and invest that at like 8 to 10% per year, right? Passive investments, 10% a year on 500,000 will pay you a 50 grand a year income without chopping into the original investment. Now, that will give you a 50 grand a year income and you don't have to work. But rather than people selling their house and putting that kind of cash away, they would rather not because they've been told that it's the best thing to do. So they'll keep it there and they'll work for 40 years or 50 years and end up asking people like me or people like who have built leveraged income or traders and, people who are financially independent, and they'll ask you how you do it. And when you tell them, they don't really like it. So I just kind of wanted to touch on that because that was kind of a story that I put out on the Instagram and got some funny views back, funny opinions back. So last week, a big part of wealth creation is the next step of growing your income. I would recommend that everyone tries to. I've spoke about it on the podcast before about asking yourself, how can you double your income? And really you want to be increasing your income by a minimum of 10% per year. That should be a goal. And people say, well, that's very, very hard. And last week, Daniel Priestley gave some phenomenal advice, lots and lots of insights. We were talking and talking and talking for 35 minutes. Tons and tons of insights came out, and he kind of gave his methodologies, his thought process, his experiences, his insights, and his recommendations. And as I say, if you haven't listened to that, go and check out episode 9. It's just, it'll blow you away. And what I want to share with you is kind of a little different kind of angle in terms of thinking about how you can develop more income. So, as I say, if you're in a job, just ask for a raise. Like every 6 months, say, can I have a raise for 5%, and kind of figure out what you've got to do that. Give value, show your worth, be tenacious, go after it, and kind of try and get that 5% every 6 months. Like, don't wait a year. Don't wait for that inflation raise. Go after it. 5% every 6 months and prove your worth. Go for it. And put it on your board. Write it that I'm going to get a 5% pay rise in 6 months. And then literally just go after it. Put a plan together. Work your way up. Whatever you've got to do to try and get that pay rise. But not for the purpose of climbing the corporate ladder, right? This is just for the purpose of accelerating this whole machine that we're putting together. This whole kind of, the cogs will turn quicker, the income will come in quicker, your savings will go up quicker, your buffer will go out quicker, your lifestyle will come, your lifestyle will be controlled, and you'll reach financial independence a lot quicker. So if you're not in a job and you're an entrepreneur and you're starting out and you're wondering how you can provide value, more value, package up a product and kind of that kind of thing, which I've been over many, many times before. But I just want to kind of share some points with you, some tips that you can bear in mind when you're creating. Maybe it's the service you run now. Maybe it's the job you're doing now. If you're a fitness instructor, if you're a hairstylist, makeup artist, maybe you're, whatever it is you do, whatever service you provide, have a think about these points. So the first thing, if you're looking to increase your income, the first thing you can look at is the difference that you're making to someone's life. So if you can kind of measure the percentage gain difference that you're making to someone's life, then what you can do is you can think about, if it's measurable, you can think about charging that relative to their annual salary. And people will naturally, happily pay for that without question. So if you're on 50 grand a year and you've got this real problem, and you can kind of you can use metrics and you can kind of measure and prove that this should increase your life by 5%. This should make you 5% happier, or this could this could increase your relationships by 5%. This could increase your productivity by 5%. If you can do that, you can happily charge 5% of their 50 grand salary and they will happily pay it. So it's very, very, it's a very, very simple thing. But when you start thinking about that and you start asking questions like that about your business, you really do come out with some creative ideas. The second thing is reach. So how many people can you reach? And this is coming down to leveraged income. So if you can provide your service to one person, don't ask yourself how you can provide it to two people, because all you do is you end up kind of overstretching yourself. You might use the same suppliers, you might get a bit sloppy, you might, share the sales, or, whatever it is, but you get a bit sloppy trying to stretch from 1 to 2. Ask yourself the question of, how can I go from 1 to 20 or 1 to 5, 5 minimum, I would say. How can I do this service and reach, instead of reaching 1, reach 5? At the same time? Or how can I deliver this to 5 people instead of 1, or 5 every one? And the higher you go, obviously the better. The next thing is income. If you're just, look at all of the clients that you've got, get their demographic, right? So what are they earning? If most of your clients are earning 50 grand, like a lot of my private clients, for instance, they're between the 90 and 150 grand a year bracket, the private clients, right? 90 and 150 grand a year. If you work with clients and they're on that kind of income, or you work with clients and they're on 50 grand a year, ask yourself, how can I package this up and serve people that earn more? So how can I take this to the next level? If I'm serving people that earn 50k, what about people that earn 100k? Can I sell the same product, or do I need to tweak it slightly? Because then you're going to earn more money. You can charge more, right? So a great way is to look at the average income for the people you're serving. And if the average income's 50 grand, consider serving people that have an average income of 100 grand. Simple as that. And just by asking these questions, it will pull out of you really creative ideas for your own business. Even if you're in a job, or if you're you're just starting out, these are great questions to ask yourself. And then the last one is frequency. Okay, so frequency, how frequent are you serving people? So if it's once a week, or once a month, or twice a month, or once every 6 months, or one project a year, whatever it is, how can you serve them more? How can you increase the frequency of how you serve them? Is there another little product that you can bolt onto the side? Is there a way that you can kind of automate a renewal of this product? Is there like a contract that you can get them bound into and kind of reduce the frequency of that renewal? Is there a way that you can kind of do more sales or more events, or how can you kind of maybe you can do a deal where, if you're running events and you're running any kind of workshops to sell your product, can you do a deal with a service provider, the hotel, or wherever you host the events? Can you get a discounted rate if you run 2 per week as opposed to 1 per week? And things like that. How can you kind of ramp it up a little bit? Because obviously the more frequent you can provide the service, the more you can earn. So just a few things to think about, those 4 points. It's kind of the difference you can make to people's lives, the reach in terms of how many people you can reach, the income of the demographics, the income of your average client, and then the frequency, the amount of times you serve them. And if you bear those things in mind, you'll start asking yourself some good questions and you'll get some good answers. Alright, so that just about wraps it up for this week. I've been talking for a while. Hopefully it gave you some insights into kind of some myths and traps. Hopefully it got you thinking a little bit. As I say, if you didn't catch episode 9, go and catch that with Daniel Priestley. Phenomenal episode there. Really pleased to have him on the show, and he was really grateful to be on the show as well. But hopefully it's kind of giving you some insights, giving you some things to think about, and really what wealth creation is all about. Financial independence isn't about building net worth. It isn't about pressing the up button on the treadmill or running faster on the hamster wheel and trying to climb a ladder, or it's really about freeing up your time. That's what everyone's after. People are after time so they can be creative. Again, you're not going to sit on the beach drinking cocktails. You're going to want the time so you can divert your attention deliberately to areas of life that you find fulfilling and rewarding, and you want to contribute in those areas, and you'll never stop because that's deep wired inside of us as humans. So thanks for listening again, guys. Hopefully you've had a good week. I wish you a great Thursday. Have a great rest of your week and a great weekend, and I'll see you next week.
Subscribe to this podcast so you don't miss an episode. For news on all future events and updates, go to jasongraystone.com.